Hello, everyone, and welcome to a special edition of Nasdaq Spotlight. I'm your host, Craig Bill, a member of Nasdaq's Global Link of Black Employees Network. Today, we welcome a very special guest, Ashley Brewster. She is a wealth advisor and also a fellow Miami Redhawk. So, Ashley, we'd love to introduce you. Love and honor.
Thanks for the introduction, Craig. I'm happy to be here with you all.
Ashley, we have a couple of questions for you today. I'd like to start with probably the biggest one that I have on my mind, and that's what inspired you to write the book No Debt Zone?
So, right after I graduated college, I actually met with a financial advisor myself, and I really wanted to get serious about attacking my student loans and building wealth myself. And so I started documenting my journey publicly on my social media platforms, Instagram, Facebook, and got a lot of inquiries about how I was doing it, especially the strides I was taking, knocking out so much in such a short period of time. And decided to write everything down like in a notepad so that I had my rehearsed answers about how I did it. And then it turned into a story about how to avoid bad debt, how to buy certain things, like cars and everything, things that I was doing. And it kind of expanded from that, outside of just student loans and into, just early adulthood. And um, even with lower incomes, that was my main target, because when I first graduated, that was where I was, and there was only so much income that I had coming in to be able to be financially stable, and that was the message that I wanted to push, so that everyone else had that opportunity to see that it could be done.
So, Ashley, you mentioned that these are the steps you need to live and thrive instead of just survive. What's the difference between these two states from a financial standpoint?
Yeah, so a lot of people just go to work, pay their bills, and go home, and they're not really living and thriving, and they're just surviving. And the steps that I have in the book start from, the very beginning. Well, first you need to assess where you are, to see exactly what am I doing? Why do I have more month left than money, every single month? And so that's kind of where, you start, and you just get a feel for where you are, and then you put a plan together, to be able to say, like, I don't have to fully give up fun or things that matter to me, but I do need to be focused as far as savings and paying down debt, putting things in the right, wealth building vehicles, so that eventually I don't have to work. That's the whole goal here, that of working, doing something that you want to do. A lot of people start off maybe doing something that they don't really like, and they have to do that because of the lifestyle that they've created, which causes them to live check to check. The stat is that almost 80% of Americans are living check to check, no matter their income. And, 25 to 30% of those people are earning six figures or more. So it's not necessarily just an income problem, but it's also just getting a plan together so that you can have a feel of what your salary actually is and enjoy some of it, instead of just surviving to pay your bills and eat.
Now, wealth itself seems to be this ever elusive concept. Uh, how does one begin the journey to creating wealth that lasts generations?
I would say the main investment would be in yourself. That's the first. You want to do something that's going to create the income necessary to be able to have disposable income, to be able to save and invest. And that's really, it's not really talked about as much. It's like, oh, just save this amount of money. But it's better to, if I had $1,000, I would probably invest that in a skill, and then have that skill pay me an additional 1,000 plus per year for the next, 30 to 40 years of my working career, and then use that to buy income producing assets. Like, a lot of people are really intrigued with the stock market right now. But those are actual companies. And if it's not a company that is worth the investment, then you shouldn't put your money there. If you don't fully, understand what it is, don't put your money there. Same with real estate. Investing in those income producing assets allows you to retire eventually. And so, your 401k, your 403b, an individual retirement account, an IRA, all those different avenues are good places to start. They do have IRS contribution limits, depending on age, but those are definitely vehicles to help you build wealth over the long term. And it's definitely something that has created wealth for generations, especially the stock market and real estate. I'm not too keen on real estate investing. I personally don't own any real estate investments, but I do know that those are investments for people who are already financially stable. And so I think if we have that conversation of stability first, have income, and then the disposable income to make consistent contributions every time you get paid. If you get paid monthly, bi-weekly, weekly, every time you get paid, you set aside, at least 20 to 25% of that paycheck toward these income producing assets. That's how you really start to build wealth. And then anything above that is excess, maybe a taxable brokerage account, and any of the retail financial firms that you could start. A lot of them have people who are willing to help you if you call or even set an appointment with them to get started.
Now, since it's contextually appropriate, are you saying that investments within certain asset classes, like equities, are compatible with building wealth that spans generations?
Yes. So, the equity markets have done exceptionally well over the last century. The stock market has returned anywhere between 8 to 10 to 11% for the last 90 years or so. And so if you're looking to get rich quickly, then that's not the way. But if you're looking to build wealth over time, it's definitely a great way to, outpace inflation and multiply that income that you are earning today. And it's a great passive way that you don't have to do much work, but still understand what you're doing. But before you do that, it's definitely important to have minimal debt and have cash reserves for an emergency fund put in place before you even really get started investing, because this is money that you are saying, I don't need for at least 5 years. And then hopefully that starts to compound over time. And then even once you stop working, that money is still generating income for you, is still growing because the economy is growing, companies are growing. And then eventually you have that estate plan put in place and you can say, hey, I want to leave my children X amount. I want to donate here, charitable giving. There are lots of ways that wealth can be amassed, but the stock market is definitely one of the best ways to grow that multiplier for wealth.
Thank you for that. And I've heard that the law of compound interest is something that is one of the most valuable tools that you'll have at your disposal, so that really resonates. Now, Ashley, what is one bit of advice, financial advice, that you would give your younger self?
Definitely. I definitely would get serious about meeting with an advisor the day you turn 18. Don't wait. Your first job, if you have a job in high school, like that is something that I wish that I understood more of about, investing, just because those years are so crucial to the compounding in the markets. So, I mean, the earlier you start, the better. And yes, it takes, decades to really get that compounding going. But, someone who starts at 19, if they invest a few $1,000s a year starting at 19, by the time they turn 65, that could be a great substantial amount of wealth just because they started so early. And the later you start, the harder it is for the compounding to start. And so, the more you have to contribute. So that's why, I would say get serious about it earlier on. And I know wages might be minimal at those ages, but just understanding good principles. Avoid student loans if you can. Avoid, high car notes. Drive a reliable car. Don't impress anyone, because those decisions end up catching up with you later on in life if you don't take advantage of your youth. And so get, certified, talk to different network way more. I wish I networked way more to learn about different industries, not just for the money, but, just have that exposure. Definitely connect with different people who may not look like you. That is definitely something that could expose you to a lot of opportunities that you wouldn't get if you just confined yourself to the regular day-to-day things that you're used to.
So during your day-to-day as a wealth advisor, what brings you the most joy in your work?
I think it's just letting people know that they're going to be okay financially. Um, Retirement is definitely a huge topic um, in anyone's life. And letting people know that, hey, we got your back as your CFO, you're the CEO of your life, but we have your back to help you make those financial decisions, that you have an accountability partner here, and that no mistake is too big to recover from. I think that's what gives the most joy, the coaching aspect of what I do. It's definitely a joy to see, like, hey, after all these years of your hard work, you're rewarded with this wealth that changes your family tree. Making the right decisions consistently, seeing that and the joy in their eyes definitely gives me a lot of joy to keep doing this and understanding that this is needed.
Ashley, thank you so much for your time and joining us today and letting us know how we can become more financially literate and more about financial education. For our Nasdaq followers, thank you for tuning into this Nasdaq Spotlight, and please stay tuned to Nasdaq channels for more to come.